Good evening, good morning, good afternoon, whenever you are. This is another webinar from the series of the Become the cTrader Master. And today we are going to talk about the candlestick charts, candlestick patterns. We will see how it is to enjoy and improve trading using the candlesticks. So what we are going to do right now is to switch to another forex pair on our trading platform, cTrader of course, and as you can see, I will choose 1 hour time frame with the regular candlesticks. If you don't know where to find them, they are here. For example, this is the standard candlestick. You got the tick, Renko, Range, 𝗙cie𝗹𝗹cie, but we will talk about these charts later on. Today we are going to use the standard candlestick charts. As you can see here, we got this table with different visualization of the chart, like a tick, Renko, Range, 𝗙cie𝗹𝗹cie, and standard candlesticks as well. So this is where you can find them, and this is the standard view that anyone can find on his cTrader platform. As you can see, I'm having two types of the candlesticks. One of them are green, the other one are red. So let me just zoom in and show you guys a typical candlestick on this let's say 1 hour chart. What does it mean, 1 hour chart? It means that every of these candles represents 1 hour of time. For example, this is the last hour that started between 7 o'clock and 8 o'clock, and during this time the market, as you can see here, opened at the level of 148.82, went down towards the level of 149.74, but closed here at this level at 149.77. This is the down candle. This is why it is red, because the open of the candle is higher than the close of the candle. Directly opposite candle is this one. This is still 1 hour candle, which represents the 1 hour price movement. This one is from 9 o'clock to 10 o'clock in the morning. And during this hour, market opened here at the level of 149.62. It went, during this hour, the highest level of the price was 149.75. So that's the top of this upper shadow. The lowest level of the market was at the level of 149.55. This is this wick or shadow, lower shadow. Eventually market opened, remember, market opened here. Eventually market closed around the level of 149.74. So market opened here, closed higher, which is why this candle is green. So it is an up candle. Market opened higher and closed lower, which is why this is a down candle, which is why it's red. Okay, and that have a consequences on our chart as well. So as you can see, what do we have on the standard chart? We have the candle body, which is this rectangle, in our situation green rectangle, and we have the high 149.72. we have low, so the extremes are being played here. Low is at 149.55, and of course the top of the rectangle is closed, and the bottom of the rectangle is closed. Take a look at this candle. This candle closes exactly at the same level that this candle opens. Yeah, this is a red candle, so it opens here. That means the previous one closes at the exactly same level. which is why this candle opens here. That means the previous candle closes exactly at the same level. All right, and this is how the daily the candlestick chart is being plotted on the chart. Basically, how do you use it? Why should you use it? And what are the benefits of using the candlestick pattern? The first thing is, which is quite obvious, and you can see it straight on, that you can see the extreme of the prices. Okay, for example, you can see the low of this hour, you can see the high of this hour, you can see the high of the next hour, low of the next hour. Not only the open and the close. Okay, the same situation is here. You can see the extreme low, extreme high, not only open and the close. So you can see the dynamics of the market. Okay, you can see how the market behave during 1 hour, because, for example, let's take the last hour as our example. The last hour, this is a 1 hour candlestick. Let's break it into 2 30-minute candles. So that's the newest candle. This is our candle, and this is our candle. These two candles are 1 hour candle, right? So you can see that this market again went lower, made a extreme low here, went back to close here, then opened here, made extreme low here, closed here. It seems to look like this. Let's see if our suspicious is correct. Let's switch to 15 minutes. So we should have 4 candles now. Okay, so this is our candle, this is our candle, this is our candle, and this is our candle. All right, because as you can see, this is the candle. Oh, this is one that goes from, this is one from this is our candle, this one, and this one. Yeah, exactly, because it's 9.8, so the 15 minutes candle hasn't closed yet. So those are our candles, and you can see first at 7 o'clock we went down, closed here. Markets open, goes little bit up. We don't know whether we went up or whether first we went down. We don't know that. But next 15 minutes we went down. Next 15 minutes we went down. Now, what we can do is to, of course, go as low as the 5 minutes, for example, so we can see which market movement was first. So let's go and do the 5 minutes. So we should see. Okay, we should see, let's say 7 o'clock. So this is 7 o'clock. There you go. So this is our candle, 5 minute candle. As you can see, they all look the same, which changes our time frames from 1 hour down to 5 hour. It's 5 minute. First 5 minute we go down. Second 5 minute we go down. Third 5 minute, nothing happens too much. Then we went down in order to close here. Then we went up in order to close here. Then we got down movement. Then we got another down movement, another 5 minute, a little bit up. Then again, down, 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 a little bit up, down, down. And the newest candle is down again. Now, if you take a look at these candlestick formations, you can clearly see that you can see how the market behaves on the lower time frames. So you know whether the market first went down in order to go up, or whether the market first went up in order to go down. Okay, so that might be kind of important when you trade using the candlestick patterns. Yes, patterns. What about the patterns? What are the patterns? How to identify a candlestick pattern? There were more patterns, to be honest with you, a little bit lower on the lower time frames, but let me just concentrate and focus on one more. Let's say we will use oh, I want to zoom in. Okay, we will use this one, this few candles here. Is there any pattern here? Yes, there's a pattern called pin bar, and the pin bar is always a pattern that is very, very characteristic, because you can see a very big shadow, this very thick wick from the top of the candle or from the bottom of the candle. So you have the pin bar here and you have a pin bar here, followed by big green candle. So this is a pin bar and this is a green candle to the upside, because it starts here, opens here, closes here, that engulfs the whole body of the previous candle, which means this is a bullish engulfing pattern, one of the few patterns that you need to know about. On the other hand, we might have bearish engulfing pattern, which means it will look something like this, where the red candle will completely engulf the body of the green candle. So that's a bearish engulfing pattern, which is in the wrong place on the chart, but I'm not talking about this. I just want to show you the patterns right now, okay? So that looks like a bearish engulfing pattern. Look here, this green one and this red one, bearish engulfing pattern, and this is a candlestick example of the bearish engulfing pattern. Little bit up and then big candle down, right? Red candle. So we have pin bar here, which looks like some sort of the shooting star. So shooting star is a very, very specific candle which has a very small body, but not flat like this, okay, but a very, very small, big wick from the upside, a little wick to the downside, and it's a very, very powerful indication of a possible trend change. What is the trend? The trend is to the upside, pin bar in form of the shooting star, and we go down. Confirmation candle is the candle that confirms the potential pattern. So in our situation, if this candle informs us that there is a potential trend change, potential trend or change of this trend of uptrend, we should see down move. So warning, hey, be careful trader, there might be some sort of the trend change here. Big red candle, confirmation of the signal or indication of the pin bar candlestick pattern. Extension is the next candle. So we have a signal, confirmation, and extension. Big, big, big red candle, way bigger than this one, this one, this one, this one, this one, this one, and so on and so on and so on and so on. You need at least 30, 35 candles to find bigger than this one, all right? And then continuation of the down move. So we went as low as here. What's the level here? 148 point, let's say 52. Let me just go back to the, yes, there you go. So we went as low as here. We left the down shadow here, or down wick, okay, and closed here, and then bullish engulfing pattern. Yeah, two candles here. There is only one candle, like a pin bar in form of the shooting star. There is a two candles pattern, bullish engulfing, confirmation, extension, extension, and so on and so on. Okay, so we got bearish engulfing, we have bullish engulfing, we have a pin bars. This is a pin bar as well, but it's in the wrong place, so it doesn't indicate too much. This is a very nice pin bar as well. Some sort of, you can see they are similar in the form. Of course, this wick is longer than this one, but you get the idea. These are almost identical. Now I want to just move a little bit to that side, and I want to show you. Maybe I will find one in the right place. Let me just zoom out first. Let me just try to find one. Okay, I got the bearish engulfing patterns, perfect bearish engulfing patterns. Take a look here. Big up move, green candle, green, 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 up, 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 up. Down candle, red candle, telling us that, hey, bears are here. Bearish engulfing pattern, right? So the up move is being limited. A little bit sideways. Price action, again, another attempt of the bulls, big green candle, next big green candle, one big red candle saying hello, hold on. There are bears here, there's supplies here telling you that, oh, maybe this is what you see on the screen right now. Okay, so let's see that, let's pretend that there is no further data, right? So if you see this, it's like a warning sign, bearish engulfing pattern, we might extend lower. As you can see, there is no confirmation, because this is okay, there's a new low, but the candle is not red, it's green, and then there is no confirmation still, and still 3 candles, no confirmation, which means that this pattern might be soon invalidated, and off we go to the upside again. Okay, let me just find the doji, because what I want to show you is the doji pattern, and the dojis are rare to find. They are not that common these days, but they are very nice to find, because they are one of the strongest patterns that you can have. So that's the US dollar to Japanese yen. Let's find out something on the euro. Let's find something interesting on the euro. As you can see, bearish engulfing pattern here, confirmation, yeah, a little bit down, extension, a little bit, nothing going on, extension, and so on, bearish engulfing pattern. Okay, so where is my doji? I'm trying to find some kind of a doji pattern to show you guys. Let me just zoom out, because that might be easier for me to find it. I can scan more data. There is a very nice pattern here. You can see big upper wick and closing below the open, so we got the red candle, and this is very nice bearish engulfing pattern, confirmation, extension. So it's self-explanatory. Now when you look at this, you know where to find it and how to find it. There you are. We have some kind of a doji. It's not a perfect doji. Well, for our educational series, that must do. So what do we have here? This should be very flat. So this body of the candle open must be equal to close. This open is a little bit higher than the close. So what I'm looking for is something like this. Okay, this candle like that. But let's pretend that this is like the candle I'm looking for. So that's a kind of a doji candle. There you go. We went a little bit up, a little bit down, and we close when we open. So market is on the side. Market doesn't know where to go, what it wants to do. It needs much more, let's say, it needs to decide where it wants to go. Neither bulls nor bears are in control of the market, and of course in that situation market will continue to do nothing, basically. So it will go sideways, for example. Now there is another thing that I would like to share with you, is the position of the, or placement of the candlestick, which is of course important as well. So as you can see, not not every candle is a signal candle. Not every candle indicates something on the market. It needs to be positioned in a correct place, in a correct sequence. All right, most likely at the top or at the bottom of the swing. In our situation, from this low to this high, we should see some sort of the candlesticks. Okay, let me find out. Let's zoom in. This is a daily time frame chart now. As you can see, these candles are the same on every single time frame. They look the same, they work is the same, so you don't have to bother about changing the time frames while using the candlestick patterns on the cTrader. So up candle, up candle, up, extension to the upside, extension a little bit lower. This looks kind of a doji-ish, but this one is a shooting star pin bar. All right, it's a red candle, which means it's a down candle where the open is above the close, or the close is below the open. The body is very, very small. We have a big wick, way bigger than the body of the candle, short down wick. Okay, so on a daily time frame chart, what we see, let me just take a look at the right part of this of the chart. We see this, And after that sequence here, you see market is going up and up and up and up. So we have 1 2 3 4 5 6 7 8 green candles, of course. So this is an uptrend. Yeah, it starts even from here, it goes a little bit here, then we got the sideways movement, and then we're going straight back up. At the end of this move, when we see this candle, which is a shooting star, it's a pin bar in form of the shooting star, it's perfectly placed, and it indicates that there is a trend change coming, right? So we got the uptrend in the background, kind of an indication or a warning sign saying, hey trader, there is a possibility that the preceding trend, which is to the upside, is about to change. So the next day, this is what we see. We see the down movement here. So it's a confirmation, because this, we want to confirm our expectations that there is a downtrend coming. And then we have the extension. As you can see, very nice extension to the downside. Anything else? There you go, small one, then another down move, and then there might be some sort of the bullish engulfing pattern. However, this bullish bounce is not that big. Now you need to know that there is at least 30-40 different candlestick formations, both for the bears and bulls, both to the upside and to the downside, which is why we cannot just discuss all of them here, but you can easily find them all over the internet. They are every basically where. But I would like to just show you that the most important things that you need to master in order to use the candlestick charts and in order to use it effectively. All right, so this is exactly what I was talking about today with you guys. You need to take a look at where the candle is placed, what kind of the candle it is, if it's a single or a double candle, or which means this is a candlestick pattern, if the color is right, if the wick and the body ratio is correct, because not every candle is a signal, not every candle indicates something. And by using the candlestick formations, you can basically read the chart action, read the changes of the price on the, for example, in our situation on the euro dollar, but you can use any security, any ETF, any forex pair, any cryptocurrency, any metals you want to analyze in using the candlestick formations or candlestick patterns, and you can read and understand what the market is telling you and how the market behaves behind this one candle, because this one candle here, so the one that we've been talking about, okay, so the last one now on the screen, this one candle is a daily time frame chart candle. If we break it into hourly candle, we will have 24 different candles. If we break hourly chart into 5 minutes, we will have a way more candles to analyze and interpret, to learn how the market is behaving, what is market trying to tell us about the future price, possible future price action, possible market behavior. All right, so this is the biggest advantage I found during the years of trading while I was using the candlestick formations. Basically, they are very popular, they are very handy, they can be used in a different time frames. The same candlestick patterns and candlestick formations work exactly the same way on a different time frames as well. So that's another huge advantage of using the candlestick patterns, and they are very easy to learn. They are making chart reading, technical analysis, chart analysis way more effective and way more understandable, approachable for a beginner traders than any other candlestick, than any other chart that you can use on the cTrader. And of course, as you possibly know, this type of the chart can be found everywhere on every trading software, because it's so popular. It's being used by almost every candle technical analysis trader, and almost everyone knows exactly at least few of the candlestick formations, maybe some favorite ones, maybe the one that are very, very common for us, selected ETF or forex pair, which is why the traders are using this, because basically they are very, very handy and easy to learn, and easy to see what is going on on the market, basically, right? So that's why the charting using the forex, the candlestick formations, the candlestick patterns, the candlestick charts on the forex is so effective, and it can be another very good choice while you will be trying to find the best way for you, of course, to trade the different forex markets. I hope that I presented my point of view on the candlestick charts on the cTrader very, very clear, and I hope that maybe this kind of a meeting will spark at least just a few of you to include the candlestick charts in your everyday analysis of a different markets. Thank you very much for participating in this webinar. Thank you very much for being here, and I hope that we will see each other next week, same time, same place. We'll talk about another chart which will be, I guess, another charting will be either tick or Renko type of the chart, another type of the chart. So thank you for being here. Take care, guys, and see you next time. Bye bye.